ICICI Lombard is in focus after the board has approved merger of the company with Bharti AXA General Insurance business. Well, let me tell you, Bharti AXA is currently ranked 17th in the entire general insurance space, while ICICI Lombard holds 5th position in the non-life insurance business. And as per the press release, the combined entity would now emerge as the third largest non-life insurer in India. Coming to the shareholding pattern, well, its promoter entity ICICI Bank currently holds 51.9% stake in ICICI Lombard, and with this proposed deal taking place, the promoter holding will come down to 48.1%, while Bharti and AXA together will hold 7.3% stake in the company. Also, this acquisition is through a share swap deal, so the exchange ratio for the same stands at 2 shares of ICICI Lombard for every 115 shares held by shareholders of Bharti AXA General Insurance. In fact, in the recent con call, the analysts had flagged off certain concerns on the valuations of this deal, to which the company tried to assuage concerns, saying that they see significant headroom for operating leverage and cost effectiveness over time. In fact, they continue to add that as of now, the company does not require any capital raise for solvency purposes, given the solvency margins continue to remain above the well above the regulatory requirements. Well, also let me tell you that Bharti AXA is predominantly a player within the motor insurance segment, and going forward, ICICI Lombard believes that they would be able to leverage on this segment going forward. And currently, on a standalone basis, they hold 9.8% stake market share in the entire motor insurance. And with this deal taking place, the combined market share would rise to 12%. So they definitely believe that going forward, Bharti AXA would be able to help them in garnering better market share within the motor insurance space, and also their banker tie-ups will help in the distribution networks also. Well, lastly, we also had CLSA coming out with a note on ICICI Lombard, saying that they maintain their buy stance on the stock with a target price of 1,560 rupees per share. They add that Bharti AXA merger is near-term EPS dilutive, but however, they see significant headroom for cost optimization. They also add that the rationale for merger is strong, given Bharti AXA in motor segment, and with a 120% combined ratio and 7.9% share dilution, deal will be earnings dilutive. But at the same time, the scale and synergy will help ICICI Lombard to optimize expense ratio in future. So definitely a very optimistic stance that they hold of this merger and ICICI Lombard. So given all these parameters, ICICI Lombard definitely this merger would provide a required impetus to the company, and given the fact that general insurance space lately has seen a lot of traction, this merger will definitely aid the growth momentum.